Hi everybody. Thanks to be here. Maybe I use the next 2 to 3 minutes to introduce myself. After that, Vidu from Automate would start the program, and then after that, I will give a little discussion about crypto accounting 101 and then crypto subledger. And after that, David, CEO of Automate, would share with us about how he is bringing accounting and AI together to really, I think many of us here, one of the thing, including myself, is we have been using the old accounting solutions for very long, and that is where with AI coming together, we are able to move a lot of the old accounting processes together. I think within the industry, there are different softwares that actually do certain parts. But David himself, his automate software is something that is very good to use, especially in Singapore. Yeah. Give me a moment. I'm seeing a message. Hi, Jit. I thought you couldn't make it. Yeah, thanks to be here. So yeah, if you have any questions, do pop them into the chat, and then at the end of the session, if you have anything, feel free to ping me. So yeah, just let me use the next 3 minutes to share a little bit about Web3 accountant. So the thing about how Web3 accountant started, it was myself. I realized that there was quite a number of Web3 finance groups, or maybe Web3 sharing groups outside, which was more aligned with certain softwares because they were sponsored by certain softwares. And that is where I decided to start a group to share crypto knowledge, or to share Web3 softwares with different finance personnel. Myself, when I started at DGFT as head of finance, I transited over from listed company financials. I realized that finding service providers, maybe even softwares or accounting or insurance or even auditors, or we talk about internal audit, external audit, it was very tough. So that is where this group would come in. This group do not favor anybody. I welcome everyone to join. And yes, I might have some preferred partners, but this, at the end of the day, I mean, we as finance, we know that when we actually suggest purchases to our CEO, we would give them, purchase orders, which, do a tender process. We select a few vendors. So, there's no way I would think for established finance person to actually suggest one service to a CEO itself. So that's why I welcome everybody to join the group, and thanks a lot for following us, to follow our events. If there's a certain item that you want to learn about, to know about, please let me know. Today's session from the education part is might be a little short, 20 minutes, but in future I would really I would release pure education content where we have 1 hour just talking about Web3 accounting. Feel free to let me know what topic you want to listen about. So the things that I have to think about, to talk about, is maybe about internal controls, wallet controls, talk about reconciliation, talk about maybe how the accounting is done at exchanges, or to bring in experts to actually share. When I talk about experts, I'm talking about C-suites of the various companies to talk about their experience so that we can engage people of different levels. So yeah, so I mean, if a certain topic is you think you like to listen about it, you can ping me, or if you like a certain topic, feel free to join our sessions, and that is what we will be talking about. Yeah. So this session itself is recorded. Yes. So I think I don't want to take more time. Maybe can we like welcome Vidu? Vidu, if you are there.
Yes,
Yeah.
thanks, Weixiang. So, welcome to everyone for this session, Navigating Crypto Accounting and AI Integration. So, how the session has been constructed is that there will be a couple of topics that we'll touch on: Crypto Accounting 101 and Crypto Subledger Intro. So, Weixiang will actually do that. And then we'll go on to a session on how AI has been actually applied to the field of accounting, more or less on a Web 2 perspective. So the difference is that we have seen over a number of years, where traditional software, for example, like Zero, QuickBooks, or even a manual accountant, which where you have used those softwares, but most of the work is done by yourself. So now with the advent of AI and automation, this is where softwares actually have been developed. So Automate is one of the pioneers in that, which was founded and developed by David, who will be speaking a bit later on, and also showing a demo of how systems today do the work that humans used to do in the past, whether you're an accountant or a tax consultant. So David will show how his system automate literally does things like tax computation, bookkeeping, accounting, annual report generation, financial statement generation, by only basically feeding in all your bills, invoices, and bank statements. So that will be something interesting. And also, before beginning, so I think we can move on to the first session, Weixiang.
Yep.
Before starting, before we actually starts, I'll just give a brief introduction about him. So, Weixiang is a Web3 accountant. He's also a part of Launch Factor. He's the co-contributor there. He was a former KPMG, DGFT, and OKX. And most importantly, he's a chartered accountant. So that makes him well versed in the topics of accountancy, both from a Web 2 and then now from a Web 3 perspective to share his knowledge. So, Weixiang, the floor is yours to take the proceedings forward.
Thank you, Vidu. So just a little bit more about my profile. It's very interesting that I came from a space where I used to prepare the financial statements for listed company, and today we are looking at Hong Kong exchanges having more crypto businesses on board, and we can look at crypto businesses on listed exchanges websites. Yeah. So this is something very interesting for everybody. So before I start my session, I just want to share with everybody the survey results. Remember when you filled up the form to say you are participating, there is this portion where I asked like, do you have Web3 finance experience? So currently we are at a stage where we are surprisingly 50-50. So yeah, if I'm going slower on certain fundamentals or something that's very basic to some of you who are experts in this region, I do see some common names. Yeah, please bear with me. Yes. So we have a very fun crowd over here today. So crypto accounting 101. Just before I start, give me a moment, yeah. Okay. So today we are going to cover before we go into the crypto accounting portion very quickly, we are going to cover just a brief about blockchain, BTC, Ethereum, stablecoin, and I will explain to you guys why I think these few topics are very important for somebody who wants to understand Web3. Like Web3 itself, I will understand it as anything that is after Web2. So if you think about terms like your Bitcoin, your Ethereum, your crypto, your blockchain, these are all Web3. So Web3 is based on the blockchain technology to see how we are able to decentralize finance. So specifically, going into each of these topics, if any of you have questions, just put them into the comments, and we actually have a Q&A session at the end of the session. So at that time, we would speak about the questions that you have, and if there's any more discussions, always happy to take them after the session. Yep. So over here, when we talk about the blockchain, I'm not going in because of time constraint. I'm not going into details of the technology behind it, but just some of the key features that I hope some of you take away. Like why are we talking about the blockchain? What is so good about the blockchain, or what makes it different from the current technology that we are looking at in the world today? So one of it is I will understand that it's immutable. So over here, we are talking about data that cannot be changed. It's very interesting that when you have data on the blockchain, you can see that the data has been there and the timestamp is there. When is the data created? And it's over there. And one thing I realized is if I ask a owner for their wallet addresses, so wallet addresses is like your bank account number for people who are in the Web2 world, I'm able to see quickly the transactions that has happened over the last few years. And this is data that has been there, and I know that it has been there, and I know that nobody has changed it. So this is one of the usefulness of the blockchain. And the other one is that of faster settlement. So, today, let's say if you are doing a bank transfer from any part of the world into the United States, if you are not in the United States, it might take you 1 day to clear the SWIFT system. Or like, how come it only reflects in your bank account 1 day later? But today, if we use the blockchain, we are able to see the settlement almost instantly, depending on which chain you are on. But what I'm trying to say is this way of doing a transfer is way faster than the old Swift system. Yes. And then the other one is secure, decentralized, sensors, distributed, anonymous. This is other features of the blockchain which gives it different function. So the last part about the blockchain, which I want to say is Web3 finance and blockchain for finance is only one part of how the blockchain is being used. Today, as we speak, the blockchain is being used in manufacturing, supply chains, checking of carbon credits and etc., all because of the same features that we are seeing over here. So over here, from talking about some of the pros and cons of the blockchain, I always like to share a balanced viewpoint where is blockchain really that good. But because of the various good points of the blockchain, we we realized that in the past it has been used for bad activities. So we have a lot of AML concerns, like because how fast the money can transfer, uh, and that is where there's a lot of bad actors in the space itself. Yeah, and other than that is because of the whole technology being very young, there's a lot of chance of hacking taking place. So and when I talk about hacking, many of times it's not the technology itself, but it's due to human error because maybe we misplace our passwords or maybe we press on certain website that we are not supposed to. But yeah, so the easiness of it being hacked. And the other one is low transactions per second. You will be surprised how come on one hand I say that blockchain is fast, but on the other hand, I bring out low transaction per second as the bad point. So if we talk about Visa or Master, we can think about the amount of transactions that Visa or Master is handling every second. You do a tap and then the balance is deducted from your card. They are able to detect how much balance you have in your card, and then on blockchain itself for Bitcoin purposes, it's not possible today. But I mean, there are other chains that are being used, but it's not so not the take up rate isn't that high. And then the last one is significant technology costs associated with mining of Bitcoin, because to mine certain Bitcoin requires solving of complicated computers puzzle, and as time pass, the cost only increases as it gets harder and harder. Yeah. Then with regards to why is the Bitcoin transaction so good, is secure, is private, is efficient, the cost reduction without using the SWIFT system, and improve accuracy by removing human involvement in verification. So I will not talk so much about the good, but I just want to raise awareness to everybody here today listening that there are issues with the blockchain. Yes. Next one, Bitcoin. Why is it that we need to talk about Bitcoin in the Web3 world? Is because Bitcoin today is the largest token around. And over here I have put a Bitcoin cheat sheet. I like to look at cheat sheet. This one, Block Guide Group, the founder is one of my friend, and I'm crediting him here. Do take a look if you are interested into the details of the Bitcoin, and we can move on. And then Ethereum is another one that is very important to discuss. Just now, Bitcoin is the largest market cap. Ethereum itself is very interesting. It's because of smart contracts, and it's the one that is most highly used with regards to DeFi world. A lot of the DeFi smart contracts or AMM that we talk about or staking, it has something to do with Ethereum. So this is something that you cannot miss out as well. Similarly, I have put the address there. If you are interested, you can look at the cheat sheet itself. So something interesting about Bitcoin or Ethereum is their prices usually move in tandem. So when one of the price goes up, the other price of the other one goes up as well, and vice versa. The reason for that is because when investors are interested in crypto, usually they will put a huge portion of their funds into these two crypto assets and not the other tokens, because this is more stable and more reliable. And then for stablecoin itself, this is a very, very interesting topic. And because we are talking about Web3 finance, stablecoin itself has to be in the picture, and I need to explain to you guys. So how stablecoins, there's different definition to stablecoins, but for today's purpose, I would just like to explain stable coins as today you think about it. If if a company would want to buy and sell certain products on the market, and we change it with other cryptocurrency, there is no way to pinpoint a value because the value of a cryptocurrency is very volatile. It's going up or down. So one day, so I'm just sharing a story here. One day somebody would say, can I actually demarcate a crypto with US dollars? So certain companies would put US dollars inside a bank and issue a similar amount of US dollars out as tokens. So using these tokens today, when these tokens are traded around and used as a medium of exchange, people treat the tokens as US dollars itself, because any day when I take the token and go back to the company that issue it, I should get back my US dollars if the company is still there. Yes. So this is a stable coin itself. Stable coin is very important for Web3 finance, because I would think that stable coin is the blood of the system, where it enables the whole finance system to flow safely. But some of the issues that are facing the world today with regards to stable coins is, what do you think should be the underlying of a stable coin? Should we keep everything in dollars only? There are companies outside which has kept in maybe 60% cash, and then 30% in safe equities, because they feel that the stable coin has to be backed, but it need not be backed 1:1. So this is the argument between USDT and USDC, which you guys can read about. But the other one that I want to share is USDC. Just last week or recently has announced that in Europe itself they have achieved to be compliant stablecoin. So this is very good. And we look forward to see how the industry grow itself. But this would mean that a lot of the USD behind the circle itself has been placed inside very safe investments. Yes. So the last one about stablecoin that I want to discuss or share my viewpoint with everyone is, today you put money in a bank, you expect to get interest from it. But today, if you hold on to a stable coin, you do not get any interest from it unless it's a yield-bearing stable coin. So yeah, I hope to see the industry move towards that part of it. But yeah, it's still young. Okay. So with that understanding, I think blockchain, Ethereum, Bitcoin, stablecoin, we can move on to the other topic of what crypto assets there are, because when you talk about crypto and you talk about blockchain, maybe from an accounting perspective, a taxation perspective, or you talk about a layman's terms perspective, cryptocurrencies over here, they are your Bitcoin, Ethereum, and a Dogecoin. There is no value inside these tokens itself. We know that if you hold a Bitcoin today and you're unable to get any money out of it unless somebody is willing to buy it from you. It is not like today if you are holding a gold, maybe gold you can still use it as a form of a jewelry in India, and or maybe use it as in machine parts. Yeah. So same for Ethereum or meme coins. This Dogecoin is just an example. Asset-backed tokens, these are tokens with assets as their underlying USDC, USDT. These are stable coins that I mentioned. This is another USDY by Paxos, a yield-bearing stable coin. So they below these coins, asset-backed tokens, they have some underlying assets. And then utility tokens, these are tokens that is issued by maybe exchanges. This is where we are able to have some value, maybe get some discounts or be entitled to early subscription for certain products. And last one is security tokens, where this would have some assets or some equities or maybe some assets behind. So for today's purpose of discussion, we are only talking about cryptocurrencies over here when we talk about crypto accounting 101. Usually the accounting for asset-backed token, utility token, and security token depends on what is their underlying. For example, today, if let's say I buy something from the exchanges over here, so these companies are actually exchanges, I would expect to maybe receive some profit in the future. Sometimes it may be equity, sometimes it may be a debt. And in such cases, the accounting would follow what the underlying of the token is actually is. And it wouldn't follow the crypto accounting currencies kind of accounting. So this is something that all of you need to be aware of. So now to the whole part of this discussion is, how do cryptocurrencies appear on a balance sheet? This is a highly important question. And for today's discussion, So you see, when we go into the details as we go deeper and deeper, there's a lot of importance that to caveat is we are talking about IFRS today. Yeah. So if you are into US GAAP and your company is into US GAAP, please, there is a totally different way of accounting for crypto currencies because the US released some new accounting standards, which I'll be happy to share in another session. Yeah. But today is for IFRS, which is most of our audience here. Most of us are in Singapore, so yeah, or even Hong Kong, or even most of the world, we are using IFRS. And then the first one that is very clear is disclosed by everybody is that cryptocurrency do not fall into any of the standards at all. So standard setters have been looking into which applicable standards they should put cryptocurrency in, and currently they are looking at inventory or intangible assets. And then I'm just summarizing. So for it's not cash because crypto is not legal tender. I think everybody will understand that. And it's not issued or backed by any government or state. So that's why it's not put under cash. And then for financial asset, one of the bright line rule of financial asset is that you need to have a contractual right to receive cash or other financial asset for it to be called a financial asset. So that is where cryptocurrency also do not enter this standard because of that. And then it's not PPE because cryptocurrency is not a tangible asset. And then for inventory, so for most of the businesses that I've seen outside, if your company is in the form of trading cryptocurrency, you would want to put it into inventory. Yes, so this is quite a common one. And when you put it into inventory, there is ways to measure it at cost or at fair value. Yes. And then because cryptocurrency have an active market, many of them put it into fair value and then push it into P&L. We'll look at it in detail later. And then over here, the other one other than inventory that we can put in is to put into intangible asset. So for the definition of intangible asset, according to the IFRS, is a resource controlled by an entity. Future economic benefits are expected to flow to the entity. Is identifiable. There's no cash and no physical form. So sounds like, intangible asset is a good place to park it. And then over here, we look at the one where I mentioned where, if you put into an inventory, you can measure at cost or measure at fair value. So sometimes you put in inventory and you measure at fair value, and the movements in their fair value goes into P&L. This is the easiest way you can to actually do the accounting treatment. Yeah, so do look out to see if you fall inside this category. Many of them do fall into this category. And then the other one, if you don't fall into this category, then it will be a form of intangible asset where you have the revaluation model and the cost model. This is slightly more complicated because when you have the revaluation model, any fair value increase above the cost itself goes into OCI, and any fair value decrease would go into P&L. So you need to have an OCI account. You need to have to check the accounting. So this is slightly more complicated, but this is the intangible asset. Yeah, so I put two links, useful reading materials. I quote PwC, I quote ISCA. Yeah, so I mean there's a lot more, but for now, this is where we are today. For any of you who have questions, please hold them to later. Yeah, I'm very happy to engage in a discussion, but shortly. Okay, now I have 5 minutes to do this crypto subledger due to time constraint. Let me see what I can do. So because of the complicatedness of the crypto accounting wise, we need other software to help us with pooling of information. So today I'm going to introduce the AEM journaler. I'm not part of their company, so they are just a very good friend of mine, and then we are looking at so I'm just helping them to push their software. But aside from pushing their software, it's like if you look at the slides that they have made, is pretty nice for my presentation purposes. So some of the issues that we face when we talk about crypto accounting is that there is a lot of wallets, there is a lot of different types of coins, and you would hold your tokens inside custodies and hold inside exchange. How do you actually put all the transactions into an accounting system like Xero or QuickBooks that many of you are familiar with? For today's purpose, we also brought in Otome, so Otome will fall inside the accounting system here. So this is where a journaler, their software, would be able to help you do that quite easily. So they pull the transactions out, and then this is their pricing, and then over here is the software software where we can actually look at how the software is like. And then yeah, this is the team itself. Jacob himself is the CEO and he has a chartered accountant. Yes. So before I move on to hand over the mic back to David, I would just like to show everybody just a brief glance of the journaler software, which you are able to do so at this website. The slides will be sent over to all of you at the end of the presentation. Yes. Okay, can you all see this AEM software? I think you all can see, right? So the thing is over here, if you go into the software, what you can actually do is to add different wallets. And after you add the different wallets, it will appear below, and then you can name the wallet. And then over here you can see different tokens would appear. Yeah. In the traditional way without a software, every one of it is one Excel and you might have to pull it out from different explorers. And then over here is, wait, yeah. Yeah, over here you can see there's many different transactions that have been put out straight from the wallet. And by having all these transactions here and different tokens and pricing, we are able to export it out via Zero or QuickBooks or even via CSV exports for us to put into other accounting software that we are used to. Yeah. So yeah, do try it out for yourself at the AEM website. But also, I think the key things that I want everybody to take away today is if we are doing crypto accounting, it is very important that you choose a crypto subledger. So AEM is just an example. You can look at other players on the market, HQ, Alvin, Bitwave, Crypto, yeah, Trash. So I mean, but one thing is as accountants, do look and use a crypto subledger. And the other one is if you have any questions about crypto accounting, do look out for some of the crypto accounting professionals to help you with your questions. You can follow the Web3 accountants group. There are different crypto accountants inside the group. Yep. Okay, so with that, I would like to hand over to David to continue with the AI portion.
Thank you very much, Weixiang. And
David, you're on mute.
hello?
You have an echo, David.
Just a moment. Hello, is it better now?
Still, there's a bad echo, David.
Is it not better?
Yeah, now it's better. Now it's better.
That's so strange. Okay. So, hello everybody. My name is David, and thank you very much, Weixiang, for introducing the accounting background as well as the accounting methodology for treatment of Web3 digital assets. Right, this is very important. And personally, I met Weixiang because I'm also trying to find out more about Web3 accounting for Bitcoins and Ethereum. Just a bit of story because just a few months ago, I was approached by Web2 enterprises. Essentially, it's a church, and they were actually receiving Bitcoins as part of the donation from some of
Sorry, David, to interrupt you. Do you want to on your camera?
Thai, right? So they receive Bitcoins and asking how do you account for that? And I was actually a bit dumb taken because we were so taken. I mean, we're so familiar with Web2 accounting, and started to do research into how to do accounting for that. I actually went all the way to read a lot of papers or so, but Weixiang did a very quick, a good summary, and that precisely that it's But I do encourage you all to also research this area and find a way that how do you account for it. But essentially, what I did for myself is I started on Web2. I'm a chartered accountant also. And many years ago, when I was a bit younger, I had a thought that we were doing a lot of work in accounting in terms of manual tasks. And that started my journey on search for a system, which I could not find. And in the end, I wanted to develop something. Started with Excel macros, and today we migrated into systems. Some of the things I'll share today is actually a journey, but at the same time, debunk a lot of misconceptions about AI and accounting and what it truly is. So as there's a lot of people now using AI washing to say like artificial intelligence and what it is, what it is not, right? So artificial intelligence basically it's a non-human intelligence, something that behaves similar to human, okay, with past information. But if you take a look at it, it is very statistical. So my background is that I'm a son of a statistician. So I was taught statistics from a very young age, and they've been grilled for the last 30, 40 years. That's why I was able to grasp some of the concepts of AI. Essentially, AI is just human created. It's just a tool. It's just there's a lot of data, and those data create statistics and probabilities. And over time, you put in a machine, right? A machine will then just calculate probabilities and then pick one of them. So it seems to be very real. As it gets more and more better, it seems more and more real. But the fundamental of AI is actually the data cleanliness, the data preciseness, and they call it the training, right? Just training because you get better statistics, and over time, it's supposed to be better. Okay. All right. Okay. So for this display here, I'll share my screen now. Okay. All right. So this is the whole concept of accounting. Basically, there are transactions on the left-hand side, and ultimately, these transactions are being processed into source data. Data is being captured through documents such as invoices, bill, claims, bank statement, loan agreements, etc. kind of documents. And accountants are supposed to look at these documents and say, how do you then do bookkeeping, right? Putting into accounting records, the double entry system according to certain rules. In Singapore, we follow the IFRS. In US, they use US GAAP. Essentially, there are some small variation rules, but these are accounting rules created by mankind. And once it's book kept in the books, these are data, right? You can generate reports. You can generate so-called summaries that can give actual insights from managing a business. Okay, you also can generate accounting. So accounting essentially is the output of data. And once you look at the accounting data, you then use on to report to some regulatory authorities. In Singapore, it's basically ACRA, which is like the company house that you have to report once a year your annual returns after your annual general meetings. And also you need to report for tax. So tax is every country, right? A country's governments, they have a legal right to levy taxes, and taxes depend on your accounts. And accounts, you can tax either on the revenue or tax on the profits, tax based on certain transactions, right? So it goes back to accounting as a record for these transactions, and that's where you have to prepare your tax filings and be able to go to the relevant authorities to make your tax filings. Okay, so this is a whole ecosystem of businesses, transactions, the create documentation, bookkeeping, accounting. So with this framework in mind, okay, we look towards how the evolution of so-called traditional accounting, all the way to today, they call it I won't say AI accounting, but very very advanced form of accounting using latest technology. So main purpose of all this is that if you look at it, it's how to reduce your cost, time, reduce your simplicity of doing the work, right? And all rules come with a requirement to follow and to carry out rules according to a structure, according to a plan. And all this require manpower, talent, training, so and so on. What we did was basically took a lot of these rules and wrote them into, I'll call it transaction rails. Okay? So that's how it started many years ago. We wrote transaction rails. Looked at those transactions, say, how do I process a bill? The bill need to extract data, right? And then from this data, you need to classify each transaction row in that bill for a certain purpose. The purpose, we then look towards the IFRS rules and say, what is this purpose? And from that purpose, how is it recorded in accounts? So over time, we build up these rules. Okay, and over time, AI came out, right? So lately, there's a ChatGPT, a ChatGPT software called GPT-4 5 years ago, it was very hard. We used OCR, try to extract the data, right? So extracting data is one thing, recognizing the data and how to match against the classification according to the rules, right? We call it repetition. That means monkey see, monkey do. If I classify this description against that particular classification, it will be easier if the same so-called same word comes out again in the bill, and we can just repeat the same classification. So that hasn't changed too much for the last few years until recently today. So today there are various tools in the market that large language models in which you can actually read a description, and based on large language model understanding of classification, they can propose a match. So that's a big difference of the technology over the last 2 to 3 years. 4, 5, 6 years ago, when I'm looking at this auto classification, right, there wasn't much innovation. It's all thanks to large language model understanding the meaning of words and trying to match them together. So today, you will probably see more and more tools coming out of classification that accountants or engineers will be inventing thanks to the development of LLMs. Now, that being said, an LLM in Singapore trained on counting data will be different from LLM in, let's say, Malaysia or United States or Pakistan. It's very geographical centered. And all these will take time to train. So what you can see probably in the future would be different LLMs of classification of transaction data. Okay, so this pertains to bills. Right? So invoice is the opposite. Invoice opposite is the same thing as bill, but it's on the sales side, right? So if you read the description from your invoice, how is it classified against the sales transaction? So pretty much most of the so-called AI software today or AI accounting are actually taking bills and invoice and trying to classify the purpose of expenses, purpose of sales, right? But I wanted to do a bit more was to look at the purpose and say that where can we go to next time? So this would continue with more accountants researching this area to improve the classifications, right? But there's more to be done, which is how you handle assets, how you handle liabilities, equity, investments, and now even Web3 assets. So that part will be taking more people to research. For me, I've really actually spent the time to see how do we treat recording of assets like property, plant, equipment, investment properties, intangibles, financial instruments, financial assets, intangibles for assets, and how do you process the subsequent so-called recognition or valuation of these assets plus the recognition. So basically, we wrote the rails for this for assets, including liabilities. We now can process loans. Because loans involve provisions, right? We also involve also rental agreements and so-called finance lease. When you have these agreements, we took the document to be put into our reader, extract the data, and then process the data into accounting records for these liabilities. Okay, so it appears to be AI, but these are actually human written rules with data. Okay. So now today, what has Automate done, basically it says that we looked at, besides uploading invoice and bills, we can actually upload also bank statements to extract the bank statement data, and then try to now we're working on building a machine assisted reconciliation method using AI to match the data in a bill for deposits against invoices or so-called a withdrawal against a purchase bill, and then we say that it's being recorded as settled. So this is one form of assistance that we think they can launch in the future once this AI is being built more and more to do the reconciliation. In addition to that, we also built a system that can read financial lease documents, loan agreements, and as well as rental agreements, extract the data, and then process it into what accountants do is that they would prepare the Excel spreadsheet with all the so-called interest accretion or interest deferred interest amortization, so on and so forth, right? And this will then create all the schedules for the posting. So this is all automated today because the data is able to be extracted, processed, and then we write a code for all the amortization and processing every month end. Okay, now this data is being extracted now and then pushed into automated recording. So typically almost 90% or more common journal entries or closing the book adjustments, handling assets and liabilities is automated today through Automate. Okay, and from that, we have a base data that's being stored. As I said before, from the data, you can generate reports. So text is just one of the reports. Text computation is just one of the reports. Okay, that can be generated. And we also now today, we're going to launch also a writer to write annual financial reports. That means the director's statement, the financials, 4 financial statements, including your policies, including your financial notes and disclosures, all right? And including tax reconciliation also. Okay, so this is pretty much rundown for Singapore, and to make things convenient, we link these systems to the tax office Singapore to file your taxes. So it seems like it's a lot of AI, but I would say that what truly it is using AI to extract data, recognize the purpose of that data, putting the data into the proper rails, proper processes, and those processes run to record the accounting, the journal entries, and recurring transactions. So this is what AI, so-called AI-assisted accounting is today. Okay. So this is typical from a resource from IRAS. IRAS, the Inland Revenue Authority of Singapore. It says that all your transaction data starts as source documents, right? You have your cashier's register all the way to e-payments. These are then pushed into accounting software. Okay, and this software will convert the data into usable information and then being processed for purpose of tax, filing bill to the Inland Revenue Authority, or preparing for financial reports or XBL reports, and then prepare for your annual general meetings and file as annual returns to ACRA. So this concept can be applied to other parts of the world. We welcome fellow accountants in other parts of the world to see how can this be also done in your own country, and perhaps take some inspiration what we did and see if you can do something like that for your own country also. Okay, so that's so much for AI accounting. Hope that we have clarified more about what it truly is. It is not a magic tool that can just throw documents and straight away do magic. It's actually created by men. Okay, and we hope to do more research in this area to facilitate this, because ultimately people are meant to use resources to run businesses, not keep doing general work that keeps repeating again, right? That's better suited to for a run robot. And all these systems assist to provide information that ultimately people are the ones who make decisions. What thing to do for the what decision to make every day. If you can get more information and say prompt very pertinent information, critical information at your fingertips, hopefully that we can assist our clients or our companies to survive better in this very competitive world. So thank you very much, everybody. And I still have about maybe around about 15 minutes. We can just share what it looks like. What AI accounting look like. I'll share you automate now. Okay. So I spoke about using a document extraction system. So there's a few systems out there in the world today. Our document is not only one. There's Rusum, there's Data Molina, HubDocs, and those things. But each of them got different strengths and weaknesses. All right. So for ourselves, we built something they wanted to solve. So most of the time we could find bills and invoice extraction and bank statements. But we wanted a bit more. So we went on to do funding, which is like loans, loan payable, finance lease, and rental. So typically out there now, currently, you can get this kind of system where you can upload a bill. Okay, you upload a bill, something like that, and once you upload the bill, it will actually extract the data, right? It extract the data and then you push the data out here, okay? So you extract pretty accurately. So for this example, I actually added one more dummy data down there for the purpose of demonstrating to one of our clients, putting an asset down there. So if you have a bill here with asset, you also record asset, and this will be classified by the system, okay? And if this is an expense, for example, this expense has a so-called relevant period. The system also extract the accrual calendar. As you know, there's most people prepare like prepaid expenses, expense accruals. So this, by putting a calendar, the system will actually execute the accrual process. It means we space out expenses or the income over a period of time. And if this particular bill pertains to an asset, you also put it in there, it will then auto post it into the system and your depreciation will start automatically, right? So this is today, you can see more and more such systems out there in the market. Okay. Bank statements is useful, but if you have bank feeds, then you do not need to know this. But some countries whereby bank feeds is not feasible or it's quite expensive to get bank feed, this can be considered by putting a so-called a bank statement in here, for example. All right, so this is a typical example of a bank extraction system, right? We can see that it extracts the data and then put a deport with row, but more importantly, we want to extract the contact and the document number pertaining to bills and invoices so that you can do the auto reconciliation, right? So do go out and check out a few other systems out there. One of my good friends called Sample.io in Singapore, so they also do data extraction. So if you want to play around this system, there's quite a few bad players out there using so-called machine extraction system to extract data out. But take note, more importantly, is you want to use what are the data, important data information you want to pick up, particularly to assist the next process that goes into your accounting processing rails. So in this case here, we thought that getting the contact person, the counterparty is very important. So over here, you can see here, there's a counterparty, right? So this bank statement is very, very nice, okay? But in terms of description, sometimes the purpose and then the document ID is muddled inside. So we use AI to try to extract as much as possible to piece the data into a very structured form that can be used for reconciliation. Okay. Now, besides this, we also looked at funding, which is loan documents. So today, using extraction and large language models, right? You can actually put a loan document here, like that. Okay, so the loan is probably this loan agreement. Yes, this document is a resolution, for example, and then behind there is a loan document. So the system will process through a document reader as well as extraction, and the entire document will be extracted into vectors. The AI will then read all the vectors and say what is likely to be a name, UN, and see here, it will extract the proper data as long as you put this is created by accountants, right? Where there's currency, there's a principal, there's an interest rate, and for this data, you then go and create your loan provisions in the system. So it's not magical science. It's just knowing what data to extract out. So I believe that once more accountants know about what we're doing, right, they can actually create more document readers for different purposes and different industries. We hope that this will inspire you all to look in this area and create your own systems also for your own countries and for your own industries. Okay, next one will be finance lease and rental. I think it's quite interesting because currently these are mainly manually prepared by accountants, right? Okay, for example, this is a Hitachi document here. So this is typical finance lease document in Singapore, right? And so these are the data fields that we picked up. Okay, we specified clearly, and more importantly, it picks up the start date, the so-called the principal amount, the sum of years, and the deferred interest amount. It can also piece together installment amounts so that we can actually then determine when to pay these installments. For all this information, this is what you get today. You get things like that. Okay, for loans, you get basically the loan and then your interest provision, effective interest rate. Whenever you make a payment, the computer will calculate the provision of interest. When you put in a loan installment, it will reconcile for you also. Okay. Next is a finance lease. See here? So this is a finance lease. As you can see here, the finance list is there is a so-called deferred interest and then a finance lease amount, the principal amount. Okay, and then this payment back. The deferred interest is being amortized, so you can choose straight line or effective rate. So all these are not rocket science. It's just a typical Excel spreadsheet, but it's now put in the computer system, and every month an entry we put through, right? Every month entry we put through until so this actually release your work. Right? This is for rental agreements. So this is a right of use. There is actually a so-called the principal and then the so-called the present value of interest amount. And the interest will be then so-called amortized, and this is called interest accretion. And you get a summary here to show that the so-called the present value and followed by all the interest accretion amounts, right? So there you go from this this data. It saves your time. And today, because I said there's a data, the system also can generate different type of reports. So one of the reports generated is actually the annual reports. Annual reports is just a report, right? So if somebody is able to put all the data together in one place, this will be the result that can be possible today. Okay, this is actually generated system, full annual report system. Pretty complicated, but as long as you have the data, this can be created. It's no rocket science. So these are some people say this is not AI. I didn't say it's AI. I say it's AI assisted accounting. This is actually just using rules written by me into the system. I mean, most people can do this. It just take time. So somebody could actually, launch a rocket into SpaceX and then land on Earth, right? Just because he spent a lot of time, effort to do it. So I spent 10 years doing this, and today this is the result of having a report writer for annual report. So it's I think this will help a lot of accountants today, like they can use this report. Okay. And then as for taxes, also taxes becomes so-called taxes also can be done as a report also. So all these are possible, and I think that this will help the industry of accountants as more and more accountants believe they can do this. They start to invent their little devices in their own countries, and hopefully one day accounting become very, very simplistic and very easy to use for everybody. Okay, so I come to end of my presentation. The 8 more minutes, maybe I pass it back to to Vidu or Weixiang to take over and take any questions, answers. Thank you very much.
Thank you, David. So I think that is very exciting, especially when you shared how you can actually pull information directly from rental contracts into doing ROU accounting, amortization. This is very groundbreaking, and I think for many of us here, if you are still actually writing the invoice numbers out from invoices or contracts, do think about how if you use a system where you can scan the document and you can store it, and after that use it for accounting with a lot of automation. I think it's very cool for this portion. Yeah. So this is why, like, I want to work with David to actually share. One is crypto and the other thing is about is AI. So now, I mean, to Q&A, if anybody have any questions, feel free to unmute yourself, ask the questions. Alternatively, type your questions out, and David and myself see how we can reply to your questions. I think I saw one here which is very interesting, that is really different people have been asking me itself is, okay, so what's the difference between AEM and HQ XYZ itself? I think for AEM itself, they are a crypto subledger, so you will use them to actually pull your data from on-chain into the accounting system. For HQ itself, I know that other than having a crypto subledger, they offer payment systems, so you can use them to make payments, crypto payments. And also they are coming out with a debit card feature where, if you can issue debit card in your companies, that would help with a lot of payments and expenses, and can think of how the information will flow, from the payments directly into your accounting system. So yeah, that's the short answer. And I think for AEM, one of the benefit they have is they are very price friendly. That's why the price list is inside the slides that will be shared. I think $9 US dollars, and they have 30 days free trial for you to try. So I think they are doing more price competitive because the founder says that he wants to do something that is more pocket friendly for other Web3 startups. So that is definitely a crypto subledger to check out. But if you are looking for something that is more extensive, your team is more developed, definitely do check out HQ as well. They have a pretty neat software as well. So yeah. So
Question now, Weixiang. Okay. Can't seem to understand where it's coming from, but it seems that the data from this AEM, they provide a journaler. Is it they provide the journal entries and you have to map it into your chart accounts?
yes, so the journalists would have a chart of accounts that they can pull from your AEM software, and then they can do the mapping and send it across so that the data can be captured by by AEM by Automate in like SQL version. Yeah.
Okay, so besides journal entries, right? I mean, data comprise of also quantity, rates, revaluation, those data, right? So I'm quite interested to know because we actually put this in our system that can actually create the journal entries already. So I was wondering whether AEM or those other providers like they actually can provide the source data, because once source data come, we can also then do the auto journals to go in. And one other information will be mentioned that the intangible assets can be recorded as a quantity, right? Like an inventory. So inventory you can buy and sell. So buy and sell is like this is like a outsourced inventory system, and then you just pump back the data for buy and sell transactions, what price into the system, and then we can generate the reports for accounting purposes.
Yep, totally correct. Yes, you can get, and I mean, then from then you will be able to see from Automate itself the quantity and the price itself. Yes, but I think with crypto it's very tough because the sources of information come from maybe custodians or exchanges and wallets where there's many different crypto data sources where it's flowing in. So when you talk about even quantity or pricing, are you going to use FIFO pricing? Are you going to use weighted average WACC? So it is not so straightforward to say what is the pricing, or I mean, but this is the issue that all the softwares are trying to solve, and also maybe accountants are trying to solve. Yes. Sorry, I think David, I can't hear you. Are you on mute or is it am
Yes.
I on
Okay.
mute?
I got one more question
Yeah.
because it's very important. Sorry the echo, but what happens if a person is doing trading of crypto assets and then decided to hold it long term? Is there a way to transfer? Because it's all about purpose, right? If you're trading, you use basically, let's say, inventory and based on the fair value model to just put a P&L, right? And then later part, you decide to hold it for more long term. You want to hold it more for FEOCI purposes. This is one of the greatest difficulty I have transferring from a FVTPL model, or in this case here is an inventory and a fair value model, to a more long-term holding model whereby you don't want to trade to P&L, you put the FVOCI.
I think for my side, I have not seen cases where people, because maybe the crypto world is still that short. I only have 2 years of 2 to 3 years of experience, and the standards actually come out with suggestion to put it into maybe talking about intangibles or inventory only last few years. So the time frame might not be so long to be able to see people that have been doing that. So far, when I see people that have been changing their accounting treatment is due to they realize that it might be more feasible or ideal for them to change the accounting principles because of other P&L impacts per se. Yeah. And I mean, the fair value through P&L or fair value through OCI transition, which you are talking about, might pertain more to financial assets, but that is not something that we see inside the space. Yeah. But interesting point. For taxation purpose, I do see people leaning on the side which will help them with tax, but this for taxation purpose in Singapore itself, whether is it a capital transaction or is it a revenue transaction, depends on the different factors that we have to consider, whether how frequent do you do it, and then yeah, because you cannot say that you're going to hold it for long term, but when I look at your activity, you are trading frequently, that kind of question. But in Singapore, there's no capital gains tax, so Singapore is still known as a crypto friendly place. Yes.
You're very correct. People tend to look at the accounting first. Then after that, when the tax come, they want them to change again.
Yeah, so it's not so. Hey, but David, thanks a lot for sharing. And I think one thing I love about your software is IRAS recognize, So I was speaking with Jacob, the CEO of AEM, just today morning, it's not easy to get, government authorities to really work with commercial entities to push something. So yeah, I think very, very, very appreciate what you are doing for the accounting community.
Thank you very much. Yeah.
Okay, so I think if there's no further question, maybe we will stop it here and we will send the slides across. And if you have any questions or want to interact more, feel free to reach out to David or myself. And yeah, see you guys next time. Thank you. Have a nice day. Bye bye.
Bye bye.